This is the trade desk on the daily chart, and the stock had a rough ride. After the company announced earnings, you can see a gap down of roughly $14 about a week ago. Let's get into the news. So Trade Desk is one of the many companies that have cited weaker ad spending as a reason to exercise caution or temper expectations for the fourth quarter. Meta, Pinterest, and Snap all expressed concerns over disrupted ad spending due to the war in Israel. Wolf Research analysts are concerned over the sustainability of the Trade Desk growth in connected TV, which is a significant contributor to the company's revenue. Now, when they announced their earnings, they said that they were hurt by the automotive strike and the Hollywood strike. However, one investor, well-known investor, bought the dip. Cathie Wood's ARK flagship fund buys Trade Desk for the first time after profit warning. A rout in shares of Trade Desk have drawn some buyers from the woodwork, specifically Cathie Wood's flagship ARK Innovation Fund that has dropped money on the ad tech group for the first time. The ARK Fund spent $34 million on 543,000 shares, according to a trading update that was published last Saturday that is. The stock tumbled 16% on Friday after a September quarter earnings report revealed a deeply disappointing outlook. In the wake of its dismal results, analysts were divided on whether the subsequent stock rout was an opportunity or a red flag over investing in advertising exposed names. For the holiday season, Trade Desk was also bought by ARK Next Generation in an exchange traded fund, ARKW, $4 million to be exact, for 69,000 shares. That fund has been a regular buyer of the company since June, which marked the first time it bought shares since selling in the latter half of 2021. Now, despite the 17% drop a week ago, the stock is still up roughly 40%. Now, kind of going to the chart, let's pull back out to the monthly chart. Have a couple of levels of interest at $100, shorter term at $85, and we have this resistance support band at roughly $65. All right, let's scroll down to the weekly chart, and let's just draw. So that was resistance. Support. Resistance. So price kind of loves this $65 band here. This $85 level, let's look at that on the daily chart. Have a nice M pattern. And here was the level for me, right? This was a drop in price, basing candle, and then a drop. So this is daily sellers, and this level worked out twice. Once in September, and then again in October. But current price is at $66.47, below the 200-day moving average. You see your momentum indicators is the 13 and the 26 starting to point down. You see the 50-day kind of crimping down, and the 100-day is plateauing, starting to crimp down as well. So The charts are telling me that there's still more downside risk. You have a lower high, lower low, lower high, and then a lower low. Where's price going to stop? Let's zoom out to the weekly. Maybe this $56 area, right? You pivot, pivot, pivot. Let's see what it looks like on the daily chart. We said 56, which should be around here. But I can't call it. I don't really see any levels of interest on the daily chart. Don't really see any high volume bars. So I believe this was Cathie or Cathie and Friends, right, who bought up the stock after earnings. So if one wanted to go long, you need to see the type of closes above this band here. Otherwise, unless you have a long-term outlook, you can't buy the stock at this time. Thanks for watching. Subscribe. Please like the video.